Hey, welcome back, everybody. So, this is going to be the watch list for Monday, June 30th. Hard to believe that the year is now just about halfway over. So, a couple of things that we're going to want to be aware of as we finish out the month and the quarter end. First and foremost, we do have a shortened week this week due to the 4th of July holiday being on Friday. So, do take note that you will see volume decreasing as we get closer to that holiday. So Monday and Tuesday will probably be normal volume. Then Wednesday, you'll start to see it drop. And then definitely on Thursday. And then the market's closed on Friday, where we will resume on Monday in the full month, full week of July. So overall, economic news Monday, we really don't have anything. This Chicago Business Barometer PMI really won't impact the markets. What we do want to watch for, though, on Tuesday is going to be this job openings, ISM manufacturing, construction spending, and the PMI. Okay, these are going to be very relevant data points that have to do with the overall heating or cooling of the economy. Okay, so more and more unemployment is going to come into effect as to what is the FOMC going to do with respect to rate cuts. Right now, they're really still not looking for a rate cut in July, even though that has been hinted by a couple of the FOMC governors. So we'll keep an eye on that. Wednesday, ADP employment data, and then some big numbers on Thursday that are actually getting pushed forward from what would normally be Jobs Friday. Okay, so they're going to release the data early, which is good. We're going to get jobless claims, the unemployment number. We're going to have the overall rate. It's been hovering still at that 4.2, 4.3 number. We're going to want to watch that stay in line. They're also going to want to watch hourly wages. So is the overall cost of employment going up, staying the same, or marginally decreasing? Now, each of those have a different lever, right? If wages are going up, then people will have more discretionary spending. If wages are contracting, then that discretionary spending comes in, and then the likelihood of growth going forward will come under a bit of pressure, okay? We're also going to note that the U.S. trade deficit is going to be a train wreck. So, I don't think they're really anticipating anything one way or the other there. And then the final PMI, factory orders, and ISM services. So again, what is the underlying strength of the economy going into the second half of the year? And then Friday is the 4th of July. I hope each and every one of you have an amazing long holiday weekend. But let's get into a couple of the charts. So SPY and QQQ making all-time highs. What we did see was this precipitous sell-off on Friday, right up here at after about 8:30 in the morning, where the president said that all tariffs negotiations with Canada are off. Okay. So now what's important to note here, though, is that even though the market reacted negatively to that, they immediately bought it right back up. Okay. Now, with respect to the Qs, because the Qs and SPY have been alternating back and forth with convergence as to which is stronger and which is weaker. So I do want you to pay attention to here, and we'll see how this holds with the futures market. But if you were just to take a fib level from the prior pivot high to the pivot low, note we're rejecting this 61850 golden zone, right? And so if we're going to reject it here, I'd like to see us hold this 546.52 for a possible bounce. If not, do we come right back down here and retest these levels where we had a bounce in the past, and then we had a redirection right back to the upside. So these levels are going to be fairly wide, right? 544, 546, 549. We don't have a lot of data to go in between the levels because we're trading at all-time highs. So definitely size down and be cautious, yet be patient. Let's take a look at SPY. So we'll see the exact same thing, right? This huge reject on tariff news where we don't have an agreement with Canada. They were specifically going after all of the digitization with predominantly Meta, Google, a lot of the data analytics from the social media companies with taxation that would have cost them billions of dollars. Now, Mark Zuckerberg actually came out and was very public in thanking the president for defending the rights of the American AI as well as social media and sectors that would clearly benefit Facebook, Meta, Google, Amazon, so on and so forth. So huge bounce to the upside. Note here we rejected the 786. So when I'm trading with Confluence and I'm watching SPY and QQQ side by side, I would have both fib levels, and I'm going to want to watch and see which one is going to fail first. Okay, this one failed and is already bouncing my level of this 613, which was from a prior pivot high all the way back here. Okay, so again, I think some time and some patience to see what do we do. Do we fail 613 down to 612 to 610, or do they resume this to the upside? Now, when you have a fib and we get the reject and they start to recover the fib, then you should look at that as overall market bullishness. So if they start to consolidate here, right, the reject you want to come hard and fast. We're not getting a hard and fast reject. Got a decent reject, but we'll see what the futures market does overnight. I do want to take a look at a couple of the banks. So the banks have been sector rotational along with the chip sector that's been driving this market higher. So we're getting a broadening of the market. So not everybody is piling into Amazon, Apple, Google, Microsoft, Meta. Now, some of those are stronger than others, and we're going to take a look at them individually. But you'll see potentially here, JP Morgan Chase is way overvalued on a historical book basis. So they push this thing down. I would potentially, and again, the banks are going to have earnings coming up first, the first week of June or the second week of June. Let's see when JP Morgan's earnings actually is, so we can make sure we got that on the calendar. Here we go. It's going to be July 15th. So we have about 2 weeks till the banks announce. So I am expecting that they will continue to push the banks higher. Now, what I don't want to go after in Chase is going to be a JP Morgan that's at an all-time high, or a Citibank that's, again, at an all-time high, or a Wells Fargo, right? These are ones that you can short, again, at an all-time high. If there is weakness, you can play these back to the downside. Now, note, again, these are pretty wide ranges because banks typically move slower. But for those of you that have been following me, you know that I've been playing DPST, which is 3x the regional banks. And let me explain why that is. So here's some great levels for DPST. I've been watching this as to how are the regional banks performing. Really don't like a long or a short position on this, although we could get a decent bounce possibly here right at around, and I'm going to mark this as just an interim level so that we have it, and we'll watch how it behaves on Monday. But at 86.32, so we're pretty much there. It was this prior peak. If you look left, you can kind of see it's where they've rejected it before, but they're pushing up into these sellers. So why is it that the regionals are going to be the catch-up trade? Well, let's take a look at a couple of the ones that I talk about frequently. Let's take a look at, first and foremost, U.S. Bank. Really poor relative performance to the overall S&P. And we're going to go out on a daily basis and let's look at this higher. So when I said that Chase is at all-time highs, Citi's at all-time highs, Wells Fargo's at all-time highs, the regional banks, they're sucking wind, right? This stock's all-time high was up here at $63, almost $64. Where's it trading right now? $45. I mean, it's a huge underperformer to the market. So why is that? Well, when there are concerns about the economy and you're going to either see which type of institution is going to weather the storm the best, it's always the money center banks, Chase, Wells, B of A. Why is that? It's because they have more levers that they can pull. These smaller regional banks really only have two levers. One of it is going to be fee income if they have an ancillary business with credit cards, merchant processing, wealth management. And then the other lever they can pull is spread income. Well, they can't manipulate spread income until the FOMC starts to lower rates and deposit costs dramatically come down. So this is a huge underperformer to the market. I'm going to go ahead and change this from a red to a blue, and you'll want to watch, do we get up here and be able to get through it with momentum, or are they going to reject this? Okay, so that's one of the regional banks. The other regional bank, let's take a look that makes up DPST, is going to be PNC. Let's go again, daily basis. Let's see where PNC is. Again, a little bit better on a percentage basis, but their high was 227. The stock's trading at 185. So that tells you that there's probably anywhere from 15 to 20% potential upside. Now, PNC is actually having more strength, that it is breaking above its price level, unlike US Bank, which is still below its price level of 185. So again, I think this is a good reason to play the regional banks for a little bit of a push higher. Let's go ahead and take a look at Truist, another one. Again, all very similar from an overall structural basis. Right, these things suck and wind. This stock was up almost $70. It's trading at 42 and change. Now, this one above all else has one of the best overall dividends. So I don't know that we're going to see a lot of sellers in this thing unless they dramatically disappoint to the downside. But again, this is a catch-up trade that they are starting to break this 43. My price level is at 43.03. If they can pick up some momentum, I think they can definitely go higher. You'll see that they don't have a lot of resistance above it. Let's take a look at it on a 1 hour time frame. This is going to be my favorite of the individual regional banks to go long, okay? And I think this one could also be a good add to the portfolio. So this is my favorite, then PNC, and then the last of the three is going to be US Bank. Again, trying not to have a bias, being that I worked there for 17 years, but the executive management team clearly does not have their shit together. But that's just my 2 cents, and I'm nobody. So that's how you want to look at the banks. Let's take a look at a couple of other names that have gained some real traction on Friday, one of them being Boeing. So this was the Air India crash where the stock was at 218, came all the way down to 197, 200. Literally is getting buy recommendations one after the other. I think we might reject this 215.69 to possibly head lower. So do watch this for an overall possible put trade if the market seems to get a little bit weaker. Now, where would you have to stop out of this? Well, I would stop out of it back up here above the prior interim year-to-date high, right? This is a 12-month high, but we're kind of operating in this zone here where I would think I'd like to see a little bit of a push lower. Let's take a look at Coin. So with Coinbase, this thing has been a insane high flyer, moving with Bitcoin, a lot of strength. We are at a bounce area here. I really don't want to short it unless we could get it below this 334. And then if we do, I think we could start to push back down here to 300. But I probably would not be going short if we break the 349. I would much rather look for a bounce, watching on how it reacts on the market open. They sell it off, they bounce it, they sell it, they bounce it, right? Let's see if they can continue with this overall trend. But it has been fairly strong, but they need to hold this in order for it to not go lower. Palantir has also been ripping to the upside. Saw some significant profit taking on Friday. Now, this one was clearly in an uptrend. That uptrend has been broken. But again, I would like to watch this if the market is going to gain momentum to the upside, right? And on the market open, they've been pushing this up and then they're selling it off. We got a really good, huge sell down to 130, and then right at the bounce level took it higher. So watch this 134.49 and then 133. If you want to try to take puts below 133.49 is going to be safer. Or if we can get up here to 136 and change, possibly puts, but ideally puts are going to look way better up here where we have some sellers. Okay, let's take a look at a couple of the individual tech names. Let's look at Apple. Apple's been absolutely horrific, although I did take a put trade on this and then a call trade, and I did it 2 times this week because on the market open every single morning, what do they do with this thing? They take it and they just literally push it higher, right? Every market open, up we go, down it comes, up we go, down it comes, up we go, down it comes, up we go. Same thing, reoccurring trend. It gets down here literally to this 199, calls, gets up here to 202.52, fail, right? They failed it here, 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 right? This is a reoccurring pattern that you can trade. So do take note of these price levels on Apple because I think they are really good ones to trade against. Let's look at Mr. Bezos, who got married in Venice, Italy. and that stock caught one hell of a bid, but really off of no news. Now, a couple things to watch. If we can come back to this 221, possibly a bounce higher, where you'll note that the overall VWAP is flatlining after the market closed. But do keep an eye on this one for a pullback to 221 to go into 225, which is my fib retracement at the 786 level. Okay, so this would be a good short up here. They break above it, long all the way up to 228. And then the last one I want to take a look at is going to be Google. Again, insane strength, right? On really not a whole lot of news, but definitely an underperformer to the market. So we are back above the 50 fib, making its way to the 618. If they can hold 178, I'd be targeting the 180 calls. Now, mind you, we have a lot of resistance up here. So this could also be a good short, but I really like the short if we break below the 176, maybe the 178, but the longer it's holding this zone, this is bullish, right? This is bullish consolidation. Holding above the zone, bullish consolidation to possibly make a run to go higher. So with that, those are some of the things that I'm watching for this week. And again, everybody, it is a shortened calendar week. We will also have to see what the president does with tariffs. I believe that the implementation date is July 9th. If he kicks that can down the road, then that could just be more fuel to the fire to head higher. So with that, I will see you all tomorrow morning at 6 o'clock a.m. for live trading. And as always, if there's questions, just ask. I am more than happy to answer them. So see you all tomorrow. Take care, everybody.